Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 2nd, 2017. I'm Frank Ochoa, aka PivotBoss. Quick announcement, thank you all for joining me yesterday for our monthly Market Outlook webinar. If you want to find the recording, in case you missed it or want to rewatch it, you can check out pivotboss.com. Right there, the lead story is going to be the recording. You can click that. It's about 54 minutes long, includes futures analysis and also some stock picks. A lot of great content. Thanks out for everyone who showed up. All right, here's a look at the daily time frame of the ES right now. One thing I mentioned in yesterday's chat was the fact that price right now is still holding below our key zone of 85 to 87s. 2287 quarter has been a big time level for us, and as soon as price failed to hold that zone, the expectation was we would fall back into this range, and that's where we are. 64.5 continues to be a major microcomposite VPOC right there, and you can see prices continue to hold around that zone. Bulls continue to defend every time we get down into 64s, very reminiscent of how prices were when we were getting below 57 halves. So it's a little early to say that we're just going to fall back into the range all the way back down, because this has been quite a bullish market. You can see the uptrending nature here. Every time we fall back, we've seen bulls come in and defend, even if it hasn't really been all too bullish overall. I mean, this was just a stagnant period here for many weeks, and we had a 2-day run up. So, you know, right now we're just kind of in a holding pattern, but holding below 85s puts a little pressure here. If there's a failure to see acceptance or re-establish acceptance above 85, 87, we could be looking at a further push across the range here. So the previous month's close is going to be very important. That's about 76s here, and any failure to hold above that zone could open up the previous week's, the previous month's low at 2240. That's right here. That's basically the first trading day of the month and of the new year. So that could be something to keep in mind. If we rotate as low as 14 to about 24s, there's a major CLV in there. So any push into that area would be a fantastic buy opportunity for a push higher, because that has proven to be rejection already many times over. So any rotation back into here would be a great buying opportunity to bring it back across the range. Again, I'm not sure we get that much movement down here, but again, if we can't get above 85 to 87, then it's going to start putting downside pressure on these lower levels. If we take a look at the lower time frame here, here's the intraday time frame. What we're noticing here today so far is the fact that after the previous close, we had an aggressive sell-off. So here's the previous close right here. After hours trading, we've seen a significant push downward. A retest of VWAP was offered, but then a higher low came in, and now VWAP is being defended by bulls. So at this time, price is trying to hold back above the previous session's low price, and there was a failure to see a continuation downward. So early on, we could be looking at a return back to value at 73 with a likely test back into 76s. 76 to 78 has been resistance, so any push into that zone up here could be a selling opportunity back towards 70 and 68. All right, if we take a look at crude oil now. Here's a look at crude oil. Here's the higher time frame. We've talked about how price has continued to hold within this range. As a matter of fact, yesterday in our Market Outlook webinar, I mentioned that this trading here over the last couple of months is very atypical here of what we've seen out of crude, even over the last several years. Makes me uneasy, quite honestly, because we really haven't seen a whole lot of participation. We've basically been stuck in a 2-point range between 52s and 54s. And so at some point here, we're going to see a major release of energy. I've mentioned that we've had higher lows coming into this resistance, so the expectation would be for an upside push. We do have a major LVN above at about 55.5. That's a significant CLVN. And so the first test into that zone, coupled with the previous month's high, could be a short-term fade opportunity back toward 53s, which is current MC VPOC. Now, if there's an ability to push through 55s, then it's going to be a major upside squeeze, because there's clear air above into 57.91 and then 59.5 and then 62s on the other side up there. So a lot of major clear air above if we can get through 55.5, but given the current range right now, The expectation is that fading the edges is likely the approach to continue to take, but we'll see how price responds. If it can even hold above 54s today, that's going to be important. So just longer term here, any push up into 55.5 and the previous month's high could be a fade opportunity back toward 53. Any push through 55.5 opens up 57.91, 59.5, and then the other side of value here, the LVN and the ledge at 62, which is a significant area to sell. So obviously we're looking way out here in the future, but there's enough energy here to really lead to some significant movement. And at some point we're going to see that energy be released. So 54s are very important for today. When we take a look at the intraday time frame, you can see how price pushed through 54s early in the day here. 4 a.m. got a big squeeze through it, held at the previous week's high, rallied, and has now come back down and is sitting right on top of 54. So this is going to be an important level. You see VWAP is trending up. At the moment, bulls are trying to keep it bid for a return to highs at 54.31. Failure to hold 54s opens up a return back toward the previous session's close at 53.55. All right, let's take a look here. I want to look at the dollar index. Looking at a higher time frame for a moment. Actually, let's bring it to the pivots. In the higher time frame here, one thing we talked about in the trading room is how price rejected off of the previous month's high, and that was the December high. A hard rejection off that previous month's high, and the expectation is when you reject the high and take the previous close offered, then you're likely going to auction all the way back toward the previous month's low, and that was achieved on the last trading day of the week, of the month rather. This lower highs right here was very important. It had a downtrending channel, and so we were looking for a sell opportunity down into that support, and now we're sitting right there at 99.5, which is a significant key level. The next key level above is 102s, and so right now you can see price is currently being rejected below the previous month's low, and that's what I mentioned yesterday in our Market Outlook webinar. Watch for some sort of rejection here. If there is rejection, and it can take a day or two or three, but watch for signs of rejection, because if price cannot remain below 99.5s, we could easily make a move right back toward 100.5 and perhaps across the way into 102s. Now, any test into 102 is likely to be a selling opportunity back down. So right now, short term, the idea is to watch for these prices below here. Any rejection could bring this thing right back up toward 100.5 and perhaps even higher. On an intraday basis, we'll take a look here at the intraday. Drop this down to a 233 tick. At the moment, again, below the previous month's low. You can see here's the previous session's low, and prices are holding at the moment. So really 99.50 is going to be the big time level here. So price can trade below this zone, but it's likely to fade the edges, especially if it gets down below these lows. So if price gets down here, it's likely to fade the edges back up. At some point, if bulls can push through 99.5, the expectations for a continuation back toward 99.76.5. All right, let's take a look here at ZB. Here's ZB. Let's take it up to a higher time frame. There it is. Now, in the higher time frame ZB, what we talked about was how bulls are defending right now 149.12s and also defending 149.24s. Those were the two key levels to defend as a bull in the previous session in our pre-market report, and it was a fantastic defense off that 149.24s. We saw a nice reversal off that zone, far surpassed our expectations. So it tells us right now that bulls are clearly defending. We had the rejection here, the rejection day with a nice absorption and a rally. Now we're having higher lows here. So bulls are clearly defending. That tells us that there are some sell stops that are now building below this zone. So any failure to hold could start to run some stops and perhaps put some pressure on these lower levels. But at the moment, given the strength here that we're seeing off these areas, this is still a zone to defend. And overall, the expectation is for a test at 151.11. Through that level, retest the next highest level up, about 152.15s, and a shot at retesting value at 153.21. That's MCVPOC. So right now, the range is from 149.12 to 153.21. Currently, bulls are attempting to defend these lower prices, for a shot at squeezing higher into the next two upside key levels. On an intraday basis, yesterday's idea was to defend 149.24s. That was the previous session's low right here. And you can see price got one tick below it and came right back up the range, back into the previous week's close price. And so far, you've seen this thing just kind of trend higher off that level. So a very solid move. Overall, 151.06 here is the likely next destination if bulls can continue to keep the previous close bid. So right now, fading the edges. If price gets down into 150.14, 150.11, that could be a short-term opportunity to bring it back to 151.07. Any failure to hold 150.10s opens up a return to 150.03, and then that big key level again at 149.24, which again, bulls are expected to defend that level for a return higher. So right now the big range is from 149.23 to 151.07. Given that we're right in the middle of that range, there could be a little bit of chop, so you got to be able to fade the edges for a shot at the opposite end. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.